Welcome to the Sterling Trading Tech Roundtable video series. My name is Sean Cahillane, and I'm the Director of Business Development at Sterling Trading Tech. As a global provider of risk and margin tools, trading platforms, OMS, and infrastructure, we thought it was important to lead conversations about the industry. With digital currencies being in the headlines and a hot topic recently, we've invited Kyle Fry, the CEO and co-founder of DIGTL Markets, to the roundtable to gain insight from him and hear and learn about what his thoughts are around the digital assets and blockchain space. With that, I'm going to turn it over to Kyle to introduce himself and DIGTL Markets.
Thanks, Sean. Happy to be here. As Sean mentioned, I'm Kyle Fry, CEO and co-founder of DIGTL Markets. We connect investors with the best high-quality global assets. We use blockchain technology and other technology to facilitate that at a super high level. My background is investment banking. I worked at Credit Suisse doing technology M&A for about 10 years. I left Credit Suisse in 2018 and have been in the digital asset space for about 5 years now, basically seeing all the booms and busts and things we're going to talk about today. So very excited to share my thoughts.
Now, thanks, Kyle. Thanks so much for joining us again. Thanks for being here and giving us a high level of yourself and DIGTL Markets. So that's going to take me to our first question, which is, what are your thoughts around the recent crypto volatility and concerns around it?
Yeah, sure. And I think on the volatility, just before we talk about crypto specifically, I think it's important to just do a definitional piece. So the way we think about digital assets in general is there's Bitcoin, there's crypto, and then there are digital securities, so the regulated side of the market. Bitcoin, we separate different from crypto. I think Bitcoin is the most decentralized network. The TLDR for folks that are just getting in the industry is that Bitcoin has made itself as the #1 cryptocurrency. It is on target and on a path to sort of be the new US dollar and gold over time. It's decentralized. No human can interact or change what it does without spending billions and billions of dollars to buy all the Bitcoin on the planet, which isn't really an achievable target. And then there's crypto, which I think is what we're mostly talking about in the context of volatility, because that's driven a lot of it. I'd say if you take crypto in general, there is a lot of innovation going on here, but there's generally a lot of unregistered securities in here as well. And there's Ethereum and all these other pieces I would broadly, Web3 NFTs put into crypto, where there are interesting use cases coming out, but the volatility is really, it's sort of inevitable in any new industry, especially as it gets big enough for everyone in the world to understand it and see it. As people saw investors and prices going up and money being made, more people came online. You do get bad actors. You do get people taking advantage of a challenging regulated space because there isn't a lot of clarity on how things work, and people do come out with get rich money schemes. And the people see money getting made, more competitors come online, people start saying things they shouldn't, you start using more leverage, and more people get involved. What happened with Luna and Terra, $60 billion being wiped out, or Mirror and Exchange with billions of dollars. There's just like in the traditional markets, there's confidence, right? And particularly things like confidence where volatility is going to happen is where people don't quite understand how all these pieces work. So when you see big headlines like things getting lost, everyone just wants to sell, sell, sell. And it creates sort of a death spiral. Even Tesla came out and sold all of their Bitcoin. And so you have all this downward pressure, which doesn't necessarily impact the fundamentals of the technology or what it's used today. But frankly, volatility is inevitable, right? Apple's gone up and down, Tesla's gone up and down. So volatility sort of is what it is, but it's sort of the part of the growing pains as a new industry takes adoption. So, there were very big issues. People lost a lot of money. And I think that's what sort of gets into the third bucket I was defining, digital securities. You start doing things in the more regulated space. that world is about investor protections, anti-fraud, and making sure people follow general rules. And I think that's been a problem that the space hasn't had as well.
No, that's it's very interesting, and thanks for that insight. I like how you kind of reference and went through the different points of Bitcoin and the currencies. So a lot of people are saying that, you know, the blockchain is going to be a catalyst for change going forward. So that's kind of takes me to my next question, which is, you know, does the blockchain ledger really help protect digital assets?
Yeah, and there's a lot of talk, if you've read, there's like not Bitcoin but blockchain, there's not blockchain but Bitcoin. People have said the underlying technology, if you just like erase all the words and the acronyms and the thinking, imagine a one place where all interested stakeholders, whether that be intermediaries, prime brokers, registries, CSDs, broker dealers, etc., are looking at one source of the truth. And so having that is very powerful in terms of the limitless possibilities, and the notion that not a single person or even group of actors can change that database of where this information is stored is super powerful, that so that everyone is looking at one source of the truth. Now, there's a very dark black and white line bifurcation between the sort of non-securities permissionless is a term people will hear, this idea that like Bitcoin is a commodity and it can be used as currency in other places. We should be able to send USD back and forth very easily, but obviously there's a whole system it goes through. Even wiring takes several days. Why can't I send you money directly? There are things like PayPal, Venmo, and Zelle that are doing that on the traditional markets, but being able to not only send money immediately peer-to-peer on a network that no one controls, to give more power to the individual, as well as this idea that there's this currency that is non-sovereign, right? A government can't keep printing it. So that gets into sort of Bitcoin. But in terms of the security on the permissionless side, the dangers there aren't that someone's going to hack the network or these things. The danger is there's a spectrum of how people hold their money. So this whole idea, folks have probably also heard, not your keys, not your crypto. If you lose it in your wallet or you lose your code or whatever, it's literally gone forever. There's no 1-800 number. So there's going to be a spectrum of folks as adoption happens where you do want to hold your money. No government can take it. It's in your control, all the way to the people that like, look, I still want an intermediary to help facilitate that. So you're going to always have custodians and these intermediaries that are going to help facilitate that spectrum of people and institutions that don't want to be responsible for the 24 character code and losing all of their wealth and money. But there's an element of the type of people. Let's allow people to elect into a system to give them more control over their wealth and over their money by taking it wherever they want on that spectrum of control. So obviously, the more control you have, then the more risk there is you could lose it, right? So there's a spectrum of safety and security of self-sovereignty as well.
The other thing is, basically, we're in the digital asset age, right? And it seems like the digital asset age is here to stay going forward. So it takes me to my last question for you. What digital assets do you see kind of being digital going forward?
Yeah, and I'll start with a quote I'll probably hack a bit. It's Robert Reifield, the former chairman and CEO of NASDAQ, said that all of the stocks and bonds on Wall Street can be tokenized. And in 5 years, 100% of them will be tokenized. So it gives you an idea of people that stare and look at this space forever and what they see this technology doing. Now, the rate at which adoption is going to happen, just like the internet, just like we've had all sorts of innovative technologies come in over time, it's going to take time for people to understand. There's incumbents in place. They do have to understand how they're going to fit in this new digital infrastructure, right? And so figuring out that business model and learning how to adopt the pieces that are going to come and go. Then I will tell you, as much as you read all the headlines, the crypto area is going to continue to evolve. I do think there's a lot of problems there. Bitcoin is absolutely here to stay. And then digital securities, that's where we focus, is the regulated side of the markets. That basically any asset will be able to be tokenized. Now, today we facilitate trading of securities almost 24/7 on our platform. We have debt instruments, equity instruments. We're able to do funds, and we could facilitate retail global investors accessing all of these different digital assets in the context of the traditional regulatory framework, securities laws, investor protections, regulatory environment. So all types of different assets will be, you get into the, start getting into the other things like NFTs. Is there a use case? Should it really be monkey JPEGs, or is it for artists and, you know, ticket sales and elements? So there are cool technologies happening in the middle, but I think there's a lot of still kind of get rich money schemes in that middle part there. So yeah, any asset will be tokenized eventually, but there's going to be an adoption. And we do live in a hybrid model where we use legacy infrastructure as well as the blockchain infrastructure.
Glad agreeing your thoughts and your insights on that. It's definitely, you know, digital age is here to stay, and it'll be interesting to see how things evolve going forward. So we definitely appreciate your insight, your thoughts, and speaking with you today and hearing more and learning more about digital markets.
Great. Yeah, no, appreciate it, Sean.